All of these things are going to affect what happens with our market right now in the short term. I mean, we have no lapse of activity this week. I mean, from GDP to housing today to earnings, the busiest week, as you mentioned, 170 names reporting, tons going on. But I think what's going to end up really driving the volatility this week are those stimulus talks, unfortunately. That is what is going to really be the overarching shadow or bright light if we can get through this week. I think it is going to, though, be a stock picker's market for those investors that have the ability to pick up on some dips, either off some earnings misses or some of this volatility that's circling around. That's where we're going to see folks really shine, and investors that have a view on the market can pick up names they like, put them in their back pocket, and get through this volatile week and even into next week to be able to hopefully see some bright lights at the end of the tunnel here.
Courtney, what's on your shopping list? I'm curious because I love a deal. I like buying goods on sale. What happens if stocks go on sale?
Yeah.
What types of stocks, what companies are you looking at in case there is maybe a 5–10% pullback in the overall market?
Well, Dom, I don't know your personal situation. What I can tell you for myself personally that I've been really active in have been a lot of the fintech names in particular. Whether we get a second wave of the virus or not, those names are here to stay. People can talk about valuations and are they overvalued and this, that, and the other. When you see a Square pull back, I'm picking up on those names. When you see places like a JPMorgan over the last several weeks, you can hate the banks all day long. The banks aren't going anywhere. You take JPMorgan really adapting to what is to come here, a little late maybe, but adapting to this fintech market and going after kind of small business with their new endeavor into the fintech space. I like that move. It's showing I'm not just an old stodgy bank. I'm adjusting to what will be in the future. I like Starbucks. People, I think that name got crushed over the last, several months here. And ultimately, I think Starbucks is going to win. China opening up, the reopening trade. And even if the reopening trade doesn't actually happen, you get to reopen and go through the drive-through, right, Dom, on your way to your golf games. So I think you pick up on names that are solid companies, are going to do well. Watch the free cash flows that we're seeing. If you like financials and maybe you don't like the commercial banks, go after some of the private equity firms. Go after some of the Brookfield asset management names. Go after Blackstone. There are names in every single sector, Dom, if you can find companies that you believe in and management teams that you can get behind for the long term.
All right, we've just got a little bit left here in the show, Courtney. I'm wondering, you put together a list of stocks that you like that are kind of both characterized as growth and value. Do you favor one over the other?
Yeah. I don't. You have to take a barbell approach. Don, what you described is value, and not from the sense of a style metric, but from a value of where can you buy names cheap. Find sectors, find companies, stay diversified, and you'll be okay for the long term. Don't think you can time this market. If any of us had a crystal ball, I wouldn't be here talking to you. You'd be on the golf course, as we've talked about on numerous occasions. And so I think, find companies you believe in and stick with them. Buy them on the dip, hold them for the long term, and when you think that you can take a little money off the table, do it. This is not a game for the faint of heart. Let's just put it that way. I think you should definitely get into the stock market. We know you have $10 trillion of cash sitting on the sidelines. There's money behind it. You're going to be okay for the long term.
Shepard Smith here. Thanks for watching CNBC on YouTube.